because it's going to take a long time to tame inflation as it did in the 70s and 80s. And that means gold will continue to gallop upwards. And if we saw how gold performed back then, back in 1981, it reached a peak at the time of about $858 an ounce, which doesn't seem very high relative to where we are today. But don't forget, that's 1981 dollars. If you inflation adjust it to today, that would be $3,000 an ounce gold. And I think that's what's going to happen in the coming weeks and months. I'm not talking about years away. I think $3,000 an ounce is likely attainable. And I think we're going to far exceed that given the amount of quantitative easing we've seen. In other words, printing of money over the last decade or so since the credit crisis.
Inflation's at an all-time high. Global instability is occurring across the world. And yes, ladies and gentlemen, we have a crisis in the Eastern Bloc. But don't fear, I'm here with a world-renowned expert to talk about how gold and silver might react. Let's go.
One stacker on a journey to find silver. International Stacker.
Hey guys, International Stacker back here again. And ladies and gentlemen, I have a treat for you today. I have a globally recognized chief executive with over 30 years experience in the creation of growth of multi-billion, that's billion with a B, dollar sustaining mineable businesses across not just some countries, but multiple continents. Global experience, ladies and gentlemen, I have the chairman and CEO of Gold Royalty Corp, Mr. David Garofalo. David, how are you?
I'm well. Thanks for having me on.
Hey, thanks for coming on the channel. I think people are going to be super pumped to hear, what you think is going on in the market and what's going to occur, because you've got a lot of history behind you. Why don't you just start out and just, tell us a little bit about yourself?
Well, I've been in the mining business for over 30 years. I've run some large cap companies. Most recently, I ran Gold Corp, which was merged with Newmont in a $32 billion merger in 2019 to create the world's biggest gold company by market cap and production. And before that, I ran a base metal company called Hudbay Minerals, one of the biggest copper producers in Canada. And before that, I was with Agnico Eagle as CFO for 12 years, and 8 years before that with Inmet Mining. So I've been operating and building mines, 15 of them across multiple continents throughout my career.
Well, first I want to, thank you on behalf of gold and silver stackers across the world, because if folks weren't getting it out of the ground, we would have, nothing to pile high. And quick question for you. Are you at all into physical gold and silver yourself?
I am. I love its scarcity value. There's very little of it on the Earth's surface. I have physical gold. I think particularly in these volatile times, people should have 15 to 20% of their portfolio tied up in gold, physical or mining equities and the like. And I think in these volatile times, having something that's so scarce, so precious, when currency, fiat currency in particular, is being printed with reckless abandon, is exactly where you want to be to safeguard your capital against the insidious nature of inflation.
Yeah, I like how you described the insidious nature of inflation, which, I just saw some numbers I think came out today. We're at 7.9%. That's a 40-year high. I mean, the last time inflation was this crazy, I was a baby in the 80s, right? So this is my first experience with rapid inflation. I think a lot of my viewers as well. I have a pretty young audience. So from your perspective, traditionally gold and silver have been a great hedge against inflation, great in preserving buying power. Now we have cryptos, and there's a bunch of people saying gold's not what it used to be. What's your perspective on it? Do you think gold is going to continue to be a hedge against inflation in the future?
I do. And I also think that the inflation numbers that you're citing vastly understate what real inflation is. If you're putting food in your stomach, fuel in your car, or a roof over your head, it's not 7.5%. It's deeply into double-digit territory. And we haven't seen double-digit inflation since the 70s and early 80s. And I was relatively young in the 70s, still in my teens. But I do remember a lot of the elements that we're seeing today in terms of lineups at the gas station, empty shelves in the grocery store. We saw housing prices go up, fuel shortages. That was driven by the oil embargo back in the late 70s, from the Arab world. But today, the oil embargo is self-imposed with, U.S. not buying oil from Russia anymore. We've seen impediments in building infrastructure like pipelines and whatnot to get oil and gas down from Canada, one of the safest places to buy it, but the US doesn't seem to want to buy it from Canada either. So we're seeing huge shortages in fuel, high gas prices again. So history might not repeat itself, but it certainly rhymes. And all of the elements that we saw in the 70s and 80s, we're seeing again. And back in the 70s, when that was happening, and even as the Federal Reserve was starting to raise interest rates in the late 1970s, inflation continued to accelerate. And I think that's what's going to happen now. We're going to see inflation accelerate even as the Federal Reserve starts to raise nominal interest rates, because it's going to take a long time to tame inflation, as it did in the 70s and 80s. And that means gold will continue to gallop upwards. And if we saw how gold performed back then, back in 1981, it reached a peak at the time of about $858 an ounce, which doesn't seem very high relative to where we are today. But don't forget, that's 1981 dollars. If you inflation adjust it to today, that would be $3,000 an ounce gold. And I think that's what's going to happen in the coming weeks and months. I'm not talking about years away. I think $3,000 an ounce is likely attainable. And I think we're going to far exceed that given the amount of quantitative easing we've seen. In other words, printing of money over the last decade or so since the credit crisis.
You know, you made like a million points in there, and I agreed with every single one of them. You're right. They changed the way they measured inflation since the last go around. And, you know, there's websites like Shadow Stats and others that show we're much higher. So I fully agree with you there. I love the corollaries you drew with like, hey, this is nothing new. This is history repeating itself. But let me ask you a question, because I feel like it might be slightly unique this time, although maybe not. Whereas we're coming out of COVID, and I probably just got my channel banned for saying the C word, but we're coming out of that where, you know, we had global supply chain issues because obviously society shut down for over a year. And now we have this crisis in Ukraine with the Russian invasion. Is this the perfect storm? Do you think this is going to be inflation and shortages on steroids compared to the 70s or 80s, or what's your thoughts on that?
Well, look, I think the recent health crisis has accelerated the exposure of the excesses in our system. It might have taken a little bit longer if it hadn't been for the pandemic, but I'd say now it's been laid bare. And those excesses were really introduced into the system back in around 2009 when the central banks coordinated their efforts to quantitatively ease. In other words, they coordinated their efforts to print more money across the world to preserve their export markets and drive their currencies down and debase their currency in order to debase the debt away. In other words, inflate their way out of debt. There's been so much debt strapped on. There's no fiscally responsible way for any of these governments to repay the debt. So what they're going to do is debase their currencies and by extension, debase the debt, inflate the debt away. And they can't stop that. You know, there's no way for them to responsibly repay that debt. So they're going to make it disappear. It's just through the magic of inflation. And what that means for you and me is that our savings are going to be eroded. The purchasing power of our capital will be eroded. And that's why it's so important to have gold in your portfolio, because there's so little of it on the Earth's surface. In fact, if you look at all the gold that's been produced since the beginning of time, it's only about 200,000 metric tons, which sounds like a lot, but it would fit into 4 Olympic-sized swimming pools. It's very, very tiny amount volumetrically. And so it wouldn't require a significant allocation of capital into that sector to drive up the gold price dramatically. That's why I think there's going to be a violent upward move in the gold price in the short term.
Yeah, you know, I agree with you. And we did see a little run the other day. We nearly made another all-time high, or maybe we did. I'm not sure, but I know it shot up and the market's jumping around a little bit. I agree with your assertion that prices are going to continue to rise. You know, where there's instability, there's flight to safety and inflation and all these crazy things going on. So the question too is, you know, kind of jumping back on the shutdowns and the restrictions we've seen and supply chain issues. How did that affect the gold mining industry? Was it a net negative? Did it present unique opportunities? What's your thoughts on that?
Well, I think it's been good for gold as an asset class, you know, because it is a flight to quality, a flight to scarce commodities. We've seen the commodity complex generally do extremely well with copper and zinc achieving new all-time highs, gold getting close to new all-time highs again, at least on a nominal basis, still far away from where the real gold price highs are, as I said, back in the early 1980s. But I think the mining producers are not immune from inflation. So I do expect, you know, operating costs and capital costs to start to inflate. and that'll undermine the leverage proposition that mining producers are supposed to provide. And that's why after 32 years of building and operating mines, I've positioned myself as a CEO of a royalty company, because royalty companies provide you the best of all worlds. They provide you exposure to the gold price, because we take a percentage of the top line, a percentage of the revenue, but we're completely insulated from operating capital cost inflation, because we're not concerned about the margin of mine, because we get a percentage of the gross revenue. And the other element of our story is we provide exploration upside, because our royalties are not only on the existing reserves on the mines that we own royalties on, but any expansions, geological expansion of those reserves through the exploration efforts of the operators.
Yeah, and you just answered my next two questions perfectly. You're like reading my minds. And, I think you hit it there. Traditional mining operations, they're going to be impacted just like all of us. I mean, the price of diesel and huge tires or conveyor belts, or, I like to watch the TV show Gold Rush. Some of your, some fellow Canadians up there, I guess, right? Well, I guess Parker's an American, but some of them are Canadian. But yeah, I've seen just, over the years how expensive that could be, let alone with this rapid inflation. And I guess what you covered too, and this is the question I got a lot from folks about, well, what is royalty model and what does that do? And I think you hit one of the main factors, is that it does maybe eliminate a lot of those traditional risks. Are there any other risks associated with the royalty model, or what's your thoughts on that?
Well, I'd say if you look at mining, the other big risk is political risk or operational risk. And if you run a large operating company, even the biggest operating companies in the world, it's rare that they have more than 12 or 13 or 14 operations within their portfolio. So if something goes wrong at one of the operations, or there's a political risk event, the shareholders feel that in terms of poor share price performance. With a royalty company, we tend to have much larger portfolios, much more diversification. For example, Gold Royalty Corp has 192 royalties in its portfolio. That's a lot of diversification. And we're concentrated in the two best mining jurisdictions in the world, Nevada and Quebec. 75% of our royalty portfolio is in those two jurisdictions. They're the two best gold districts in the world, with the lowest political risk and lowest regulatory risk. But again, given the scale of our portfolio of 192 royalties, you can imagine the power of the diversification that comes with that.
Now, you already told us that your gold stack is 4 Olympic swimming pools worth of gold that you own personally. No, I'm kidding. But all the gold that's been mined in the world can fill the 4 swimming pools, Olympic-sized swimming pools. And we know there's gold being, mined in different parts of the world right now. And some of it is new stuff, but a lot of it is maybe cleaning up some stuff that the old timers couldn't get to back in the day. How difficult is it to find new gold deposits? Like, is it going to all get mined up and then it's not going to be financially feasible to get what's left? What's your thoughts there?
And it's an excellent question. I talked about the 200,000 metric tons that has been mined since the beginning of time. And as an industry, we're only adding about 4,000 metric tons of new supply every year. So it's not a lot. It's roughly a 2% supply increase every single year, not significant in any fashion. And so what that means is that you're not going to see a supply side response to higher gold prices. It's so difficult to find new production and new sources of production. From discovery to first production is typically 15 to 20 years because these deposits are difficult to find. It takes a long time to geologically define them. It takes a long time to make an economic case. Takes a long time to get a social license to operate with the surrounding communities. Takes a long time to get permits from the governments. So it's really quite capital intensive. You're spending a lot of upfront capital over a long period of time in order to build those mines. So the barriers to entry are extremely high. So I like to say that supply is extremely inelastic to price. So if gold went to $3,000 or $4,000 an ounce tomorrow, there wouldn't be a supply side response because the industry, frankly, hasn't been investing back in exploration and mine development to replace depleting reserves. And if you look at gold reserves in the ground, what hasn't been mined yet, that's at its lowest level in 7 years. So the peak was 2012, and reserves are down 40% from that peak in 2012. So as I said, there hasn't been a reinvestment back in exploration and mine development to replace depleting reserves. So the supply side response will be extremely muted. as the gold price goes up.
Now, I love how you were talking about gold and how you inflation adjusted it. It's really in today's dollars well over 3,000, because I've done that for silver. And silver had the two run-ups in the 80s with the Hunt brothers, and again, what was it, 2011? And if you take and correct it for the Hunt brothers episode, it was like near $50. That's over 150 at today's dollars. So essentially, gold's been over 3,000 technically, and silver's been over 150 if you think about it. And that's why I think there's such a huge opportunity. When I look at physical gold and silver, traditionally, I think of, hedge against inflation, preserving your buying power, maybe not necessarily an investment, right? Which is why I started to look into companies, because if I think gold and silver are going to do what they're going to do, you would think that the companies that get it out of the ground, and there's going to be opportunities if you pick the right horses, so to speak. Do you think as these new deposits get harder to find, one of the things I've thought is, do you think they're going to start mining garbage dumps? Like, are they going to bring big machinery to get all the silver that's been thrown away and maybe like the gold off computer circuitry boards? Is that going to be a thing? What do you think? Or are people going to go for the space mining, with Elon Musk or something? What's your thoughts there?
Well, those recycling efforts, they continue. They happen, but they add a minute amount of new supply into the system, or recycling of supply. It's the amount of, there's gold in our cell phones, for example. There's silver in our cell phones because they're great conductors of electricity. But the quantities are so minute and the labor intensity so high to get that minute amount of gold and silver out. There's not a lot of appreciable supply that's coming out of that. But you're right. There's going to be increasing incentive to do more of that as the gold price goes up. But even if every cell phone, discarded cell phone were mined and computer were mined for precious metals, it would not add materially to the supply situation in gold and silver. The majority is still going to have to come from mining. And you can see, given the downward trajectory in reserves, how scarce that's becoming.
All right. And I'm going to go ahead and volunteer right now. If you ever start a space mine, I will volunteer to go manage that mine up in space for you. Now, on to the next question. What does GROY, Groy, what does that even stand for?
Well, that's our trading symbol on the NYSE American. So we IPO'd the company a year ago today. Today's March 11th that we're doing this interview, and that's exactly when we IPO'd the company. And back then we raised $90 million US and achieved a post-money valuation of $200 million with what was a relatively modest portfolio of royalties. We only had 14 at the time. But having achieved a currency on the NYSE, we went about consolidating some of our competitors in the space. It's a fairly fragmented universe, and we saw the need for a mid-cap company that provided good trading liquidity, but had the ability to grow dramatically. And we actually purchased 3 of our peer companies in the last year and grew our royalty portfolio from 14 to 192 royalties, and essentially quadrupled the size of the company from a market cap perspective, doing just that. And now, as a result of having that portfolio of 192 royalties, we have the largest growth rate in revenue over the next 3 to 5 years in the industry. We're looking at compounded average growth rates in revenue of close to 60%. And because of that revenue base and that revenue growth, less than 10 months after our IPO, we actually introduced a dividend. We yield over 1% as a result of the introduction of that dividend. I have a high degree of confidence that over the next 3 to 5 years, as we realize that upward trajectory in our revenue, that we'll look at increasing that dividend.
Yeah, back when I first caught on to your company, I can't remember quite what grabbed my attention, but I think it's when you started to gobble up some other companies. I'm like, okay, we've got a fish here getting bigger. What's going on? And, you just hit a couple of, I think, your key accomplishments, being today your 1-year birthday. Happy birthday to go in public. That's awesome. And you've gone from what you said, 14 to 192 different royalties. Yeah. What do you think? What would you say some other significant accomplishments of Groy are?
Well, it's the quality of our portfolio. As I said, 75% of our royalties are concentrated in the 2 best gold mining jurisdictions in the world. But not only that, we have royalties on 2 of Canada's biggest gold mines, Canadian Malartic in Quebec and Côté in Ontario. And we have a royalty on the underground extension of the biggest gold mine in the United States, Goldstrike. We have a royalty on Ren, which is the underground extension of that open pit mine, which will be starting to produce gold in a few short years. So we have a high quality portfolio with multi-decades of reserve life underlying those royalty opportunities. And we have many, many other royalties beyond that. We have a well-balanced portfolio. We have 28 royalties of the 192 that are either in production or in development. And so we have a lot of embedded growth, which is driving that revenue profile that I talked about earlier on. But beyond that, we have royalties on everything from early stage exploration right through to feasibility stage assets, which means we're going to have revenue growth for decades to come.
Yeah, I like that. That's sustainability, you're not just doing it all at once and then moving on and, dropping the bag on folks. You actually have some, I guess, legs built into your plan, which is sound strategy, I think. Now, when you look at Groy, what's the best way to compare it to other royalty companies, other well-known metrics? How does it measure up? Is it undervalued, overvalued? What's your thoughts?
Well, one metric that we like to use, and it's quite commonly used in the sector, is price to net asset value. And so that's the share price relative to the underlying value on a per share basis of the company, the present value of cash flows. And typically, the large cap players in the space, there's three of them, Franco-Nevada, Wheaton Precious Metals, and Royal Gold. They're trading at 2 to 3 times the underlying NAV of their business, net asset value of their business. The juniors in the space, and there are many of us now, are trading somewhere between 0.8 times to 1 times net asset value. So as we scale up the company, we expect to achieve a re-rate and start to approach the multiples that the big guys get. And that's the opportunity as we see it. There's a lot of real estate between our multiple and theirs. As we scale up through this consolidation effort that we've undertaken over the last year, and we've launched a bid for a fourth company called Elemental Royalties. And when we roll up that one, we'll add another 9 royalties, including one in Australia, which will complement the low political risk royalties we have in Quebec and Nevada. We'll continue to scale up and become more relevant, larger cap, and start to approach the multiples of those large cap players. So that's the opportunity, is that re-rate potential through scaling up and acquiring a broader, more diversified royalty portfolio.
Now, what are the analysts saying that are covering the company? Are they setting any price targets or anything that you think might be interesting for the viewers?
Yeah, typically 50 to 100% above the current share price among the principal analysts covering us. So lots of upside potential, assuming a stable gold price environment. Obviously, gold price has been very dynamic, so we think significantly more upside than that. And we're the top rated pick in the royalty space for 2 of the 3 research analysts that cover us right now.
Now, I have a question for you that I'm dying to know. So do you so when you bring on these different royalties and different projects, please tell me, do you secure like a gold nugget from each one of these?
Well, the good thing about these royalties is they're all paid for. In other words, we don't have to put another dime into them. So we own them, and all the risks, all the capital expenditures, all the operating costs, they sit with the operators. And we have some royalties that are obviously early stage, but they don't waste. They don't cost us any money. That gives us infinite optionality as these operations are brought on stream. And that means we're going to have growth for a long period of time, and we won't have to pay another dime for it.
Now, jumping back to some geopolitical issues and kind of circling back to the issue going on in Russia, I think a lot of people are starting to think this might turn out into something kind of longer and protracted. Maybe another Afghanistan or another Vietnam, or who knows. Like, how do you think this conflict, or maybe conflicts that are spawned from this, are going to affect the gold and silver kind of industry or market in the future?
Yeah, and before I give you the financial answer to that, what I should say is, there's a lot of human tragedy going on in the Ukraine and human misery as a result of this invasion by Russia. And so I don't want to diminish that, and I certainly want to acknowledge it. And there are a lot of people in the military that are putting their lives on the line. And I have a son who's in the Canadian Air Force. He's a pilot, and he'll likely be deployed into the NATO countries in Europe very shortly. And I just want to acknowledge that, and acknowledge many of your listeners who serve in the military or have families serving in the military, and thank you, and thanks to your family members for their service. But what I would say is, certainly when you have turmoil like this, gold is seen as a safe haven. And we've seen a bit of response in the recent days and weeks since the invasion in terms of a flight of capital into gold. But I think many of the things that are driving capital into gold, those dynamics have been in place for years. As I said earlier on, we have to go back to the last credit crisis when there was a coordinated effort among the central banks globally to stimulate the economies through the printing of more paper, through printing of fiat currency. And that's been going on an unrelenting basis since the credit crisis. We've seen an exponential expansion in money supply, and that's ultimately what's going to continue to drive capital into gold, because gold you can't print. There's an infinite amount of paper, but there's a very finite amount of gold on their surface.
Unless we find the philosopher's stone. No, yeah, but definitely. And, I think there's huge potential and huge opportunity in gold and silver, and whether it's physical or whether it's the market, I really believe in that. I think I know a lot of the viewers that watch this channel think that too. And, I honestly think we have an unprecedented opportunity in history that I feel only comes maybe, ever 20 or 30 or 40 years. I think something is on the horizon, which why I've gone full diving into the deep end, kind of like Scrooge McDuck, trying to swim through his swimming pool of gold. I guess he has one of the swimming pools. But I think these are exciting times. And again, I wanted to comment on the part that's not exciting is the human tragedy that's going on over in Ukraine. And let's not forget too, if these things happen that we think about, people are going to be hurt all across the world, all segments of societies. People are going to lose all kinds of money and all kinds of retirement. And, one of the big things I push on my channel is preparedness. We spoke a little bit before, and I told you I work in emergency management and I go to disasters around the world. And one of the things I really try to push is being resilient, being prepared. And not only is that, emergency food and water, or not only is that a way to, have flashlights or batteries or generator, but also protecting yourself monetarily. And a lot of people like to say, well, during a disaster, you're not going to use gold and silver. You're not going to eat that or whatever, or barter for it. Yeah, but I always say the point is to get your wealth to the other side of that instability. And, even looking back during World War II, when Jewish people were fleeing the Nazis, folks were bartering with gold coins and using it. What's your outlook on preparedness as it relates to physical gold and silver? What's your thoughts on that?
Look, gold is the only universally accepted currency on this earth. Everybody knows what gold is, but they're not accepting rubles. They're not accepting Chinese renminbi. They're not accepting the euro necessarily in many countries. US dollar is universally accepted. I get that. But in the history of mankind, every paper currency has failed at some point. Gold has not. After 4 millennia, it still is the universal currency recognized as such by every human being on earth.
And you hit the nail on the head. Gold is the one thing that has the history behind it. Because, I got into cryptos before gold and silver. The cryptos were my gateway drug into the metals market. And I know a lot of folks, younger folks, are into cryptos. But one of the things that's always concerned me is, gold is tangible. You can hold it in your hand. If it gets outlawed, you can freaking bury it in your backyard. You can do whatever you need to do. Whereas what we saw recently, in Canada, I think got a lot of people's attention when the Canadian government froze the crypto wallets of some individuals that they didn't agree with, right? And I know on Monday, this coming Monday, President Biden's going to sign some new regulations in terms of crypto. So a lot of people recently would argue, oh, Bitcoin's the new digital gold, blah, blah, blah. I'm still messing around with cryptos. I still fool around with them. But the one thing I see as safety for me is physical gold and silver. And I think you hit the nail on the head with that history, because you could go back to Roman times right now with the gold coin and buy things. You can come back here with the gold Roman coin and buy things. If you go back there with the US dollar, like maybe the witch doctor will think it's some ancient being or something, but you'd be screwed. And I think you could go over to Ukraine right now, not speak the language, get to a border and give a guy a few gold rings, and he's going to understand what you want.
Exactly. And look, I respect, younger investors investing in digital currencies, because They're doing that because instinctively they understand that their fiat currencies, their paper currencies, are being undermined and debased, and they're looking for ways to preserve that capital. I totally understand that emotional investment decision, and that's why people have ultimately bought gold in the long run. But you're right; it doesn't have physical properties. Ultimately, it's zeros and ones, and I think there's an illusion that there's scarcity in digital currencies, but the reality is anybody can create a digital currency. There's a scarce number of Bitcoins available, but there's no barriers to entry to new digital currencies. And also, and I think you hit the nail on the head again, is I think ultimately governments will domesticate digital currencies. Biden's talking about doing that. We've seen China expel Bitcoin miners out of the country because of the energy intensity of mining Bitcoin. I think you're going to see a lot more regulation around cryptocurrency, which has really been Wild West up to this point, a domestication of cryptocurrencies. And so I think ultimately, while digital currencies are here to stay, I would say you're going to see a much more rational valuation around them.
No, I agree with you totally. And if you think about it, at least with the current U.S. administration, with moving towards green tech and renewable energy, like we can't. It's not that kind of infrastructure can't support 15 billion Bitcoin miners going. Like the amount of energy. I used to run these things. I used to run like 4 Bitcoin miners when I lived in Saudi Arabia, and I'd come home to my apartment and that thing would be like 105 degrees. It was just insane, the energy.
Exactly. Consuming nearly 1% of global energy demand is going into Bitcoin mining. That's not sustainable, particularly in an environment where people want to see decarbonization of their economic activity. That's going the wrong direction.
Now, what is exciting? What's on the horizon that you're excited about with Gold Royalty Corp?
Well, look, I think the fact that we've been able to grow so quickly, and there's still much more scope for consolidation in the sector. We're going to continue to be a leader on the consolidation front. I think we have an opportunity to create a mid-tier company where none exists currently. There's the 3 big players that I mentioned earlier on, and then there's this proliferation of smaller cap companies that frankly don't have the trading liquidity, don't have the access to capital that they need in order to compete for royalty opportunities with the larger players. So my objective is to grow this company to at least a $5 billion market cap, which would be big enough to matter to a broad base of institutional retail investors, but small enough to grow meaningfully with any individual royalty opportunity. And if we achieve that objective, we're likely to have the best multiple in the space because of the ability to grow, which the big guys really can't do meaningfully with any individual royalty acquisition.
Now, where can viewers or listeners, if they're listening to this, where can they find more information and learn more about your company?
We're on goldroyalty.com. So easy to remember. We have a 1-800 number. We also have the ability for you to sign up for our newsletters. But we'd be delighted to hear from you. If you want to call in, email us on our general email delivery. Quite often I return calls to investors myself. But I have a small team that quite actively reach out to shareholders and prospective shareholders to tell the story.
And the kind of last fun question I like to ask, and I'm not going to hold you to this. This is totally speculative guess, not financial advisors, folks. But what's your guess? End of the year, when that ball drops over Times Square and it's 2023, what do you think the price of gold's going to be?
3,000.
3,000.
Yeah, there's no reason we can't achieve that real cyclical high this year, given how quickly, that inflation is accelerating. And I think, that is going to drive a significant amount of capital into gold to preserve your savings against the insidious nature of inflation.
Well, sir, it's been an honor, a pleasure, and a privilege speaking with you today. Really a legend in this sector across the world. I know the viewers are going to love this. I'm sure that I'm going to get hit with a million different questions. So I hope I can have you back again in the future. But, I guess it's time to end this video. What do we say?
Catch you on the next one.
Catch you on the next one. Woo! All right, you guys, we just finished this interview and he's still here. And I just asked him, what is this on your wall back here?
It's a gold wafer.
Woo!
So gold frame there. Yeah, it's 99.99% pure gold.
Oh,
Hanging on my wall.
that is epic.
One stacker on a journey.